Hey guys, this is Greg McLeod. Gonna give it again a second time, and sorry about the other video. We didn't have any sound. I think we have sound. I'm seeing some bars move around. If you can hear my voice and see my screen, let me know in the chat box, and that way I can actually see that you are actually there. And let me see if I can actually try to get a chat box going on here, and see if I can see my broadcast. That'd be really cool to do. Um, Sometimes I won't see the chat box till long afterwards, and I'm sure it's coming on Facebook. And you guys, a big hello to you guys. This is live, and yeah, it's really live. It's 2 o'clock, and I'm hungry. It's a little after lunch, but I think I have enough money to buy lunch. If you think, yeah, I did take euro dollar short, CAD yen buy, Kiwi dollar buy, dollar CAD sell, and Aussie dollar buy. Now there's a theme. There's a madness to this, to what I did. Okay, and it's first of all, if we look at the Australian dollar, I want to teach you something here. I want to teach you about support and resistance, and where we had lots of support. Support is like a floor, okay? So you can see price hitting this area repeatedly over and over again. This is from January 1st, okay? So January all the way to now, okay, which is a few days. We've got this level of support where the bears, they claw with their paws down, right? And then bulls hit with their horns up. That's why we get bullish and bearish, right? So these bears are red, and it's like teams. It's just like Kansas City versus the San Francisco 49ers. And a big congratulations to the Mahomes and the whole Chief Kingdom over there in Kansas City. Even though I'm a Raider fan and you guys are our arch rivals and we don't like you, but I'm going to congratulate Kansas City Chiefs anyway. Good job, guys. And so we can see a nice push down to this level of support, acting like a floor. And then what happened is, Ben, we had the RBA, the Reserve Bank of Australia, had an announcement, an interest rate announcement, and that sent prices going. So do you think that maybe somebody knew, wink, wink, about this ahead of time, right? Uh, so you're accumulating orders, and then boom, we got a nice breakout. We have a supply line. Price breaks that. People were short with stops. Those stops got triggered. Got a short squeeze rally, right? My entry was a little late. My entry should have been down here, but I don't know what I was doing. Maybe I was having dinner or something when that happened. I was there. I was watching it. I just walked away from the computer for a bit. Didn't have a buy stop in there. Buy stop at maybe like 67.01 or so would have got me in pretty good. I still made 14 pips on this trade right there, right? And that was pretty good. In fact, I top ticked. I got the high, basically the high of the day, which is not bad, right? So we top ticked that. Now, so even though I have a lot of fancy indicators here, this WADA TAR explosion deal, boom, right? It was like kind of after the fact. And I've got some Bollinger Bands on there too, and that's kind of helpful. And we can see usually when price goes from a compression, we go from low volatility to high volatility, like a spring. You ever take a spring out of like one of those clicker pens and start playing around with it because the meeting's so boring? So you start playing around with the spring, and then you try to squeeze it down, and then it springs up, and then you squeeze it down, and it springs back up. Well, that's how price is. You squeeze it down, and then after a while, it can't stay down there for long because the buying pressure is so strong that boom, we get this big press out. And then we know that we've got good support under us. That's our risk. And then, we took our trade with confidence, knowing that price would accelerate and go a little bit higher. And I see about 67.50. We still probably have a little bit more to go, right? But you can see that after the initial push, the retro rockets have to fire a little bit, but still it's maintaining up. And the RBA came out with their announcement. There's a fundamental picture behind this too. Where we have the Australian, basically the country's been, one of the happiest countries on earth, but it got hit by fire, and also got some coronavirus fears going on. Then you had Chinese trade things going on, but the RBA is very optimistic. They kept rates unchanged at 0.75%. usually if you have a lot of, negative things happening to your country's economy, what you do is you start cutting interest rates, right? But sometimes cutting interest rates is a sign of panic. And then people go, well, what's going on? Things must be worse than what they are. So sometimes by instilling confidence, they keep the interest rates okay. 0.75 is still, wasn't that, they didn't cut. So that was actually bullish, right? Because if they had cut, we probably would have seen maybe 65 or 66, 64, just big handles down, on fear. But they basically kept rates unchanged, which is almost acts like a rate hike, right? And considering that you have like countries like the European Union, they have 0% interest rates, or Japan, which is like negative. So you can see that Aussie dollar would have been a great trade. Aussie yen probably would have been a really, really good trade too. Big boost to the upside, because you have one country that has negative interest rates. Can you imagine putting your money in a bank and being charged money? Well, hey, that's like what we have right here, right? Yeah. Okay. And it's just going to spin around for a bit, But yeah, and my market heat map, our arrangement of currency pairs by percentage change, gave us a pretty good, we saw the transition of, we saw the S&P 500 pushing higher. We saw the indices. I saw the ASX 200, the Australian stock market rally, and we can see the Nasdaq 100 up 2.66%. I mean, even the pre-market. If we looked at the pre-market on the pre-market for the S&P 500 and the U.S. stock market, we saw a big rally in the overnight, like 188 points. The S&P futures were up, right? And I think we lost connection for a bit, or maybe we're back. Okay. Yeah. So we've got the dollar yen also spiked up 0.8%. Oh, that was loud. And we see all the fear assets, the euro Aussies, the euro Kiwis, the pound Kiwis, and the pound Aussies. These currencies usually rally when there's a lot of fear. But when the fear subsides, another currency which will rally a lot is the Japanese yen, right? We actually can go to the Japanese yen, the JXY, which is our index. And we can see on a daily chart that when fear spikes, the JXY is like a fear indicator. And basically we had this big spike, coronavirus is invading and it's spreading around and people get really fearful. But after it gets so far, we have the JXY in overbought territory. Now, this is a stochastics indicator. Stochastics was developed in the 1950s by a really smart medical doctor by the name of Dr. George Lane. And George Lane, in fact, his wife still teaches about stochastics in Chicago, and he passed away back in 2004. But he developed the stochastics indicator, and basically shows us overbought and oversold areas in the market. And we can see that once we topped out here at 92 on the JXY, that we were setting up for a drop. We were setting up for a pullback. We were setting back for an area of support. And so we basically got to that area of overbought area, and then we started moving down. And so we look for this area to go. Now, let me show you something really special. This is the JXY. Well, I don't understand that. Well, look at the EUR JPY, which is the euro yen, which will go in the opposite direction. Okay, the Japanese currency is in the front on this chart right there. But then we see we have, this is the euro yen. It'll start going up, right? So when this starts going down, this goes up. Wow, you got my chocolate, my peanut butter. It's like a Reese's peanut butter cup, right? So there you go. You've got this move up. So getting long the euro yen, and it looks like it could go up for quite a bit, right? There's the euro yen, and we can actually see euro yen actually turning up from these lows. Again, that support that we're looking at is a floor. We have a lots of stuff, especially if you have 4 days of a floor on a daily chart, 1, 2, 3, 4. We're looking for a break north, and we're looking for, in my group that I have on Mondays, my private group that they'll give you an opportunity to be a participant in. We did discuss this, and we look for prices to rebound off this level of support, which is a floor for November. Look, penetrated, came back above. So think of the floor not like a concrete floor, but think of it more as like a Tempur-Pedic mattress, kind of gives a little bit. See, they jumped, like a bunch of kids jumping on the mattress, boom, and then boom, and then boom, and they're getting higher, boom, they're getting higher, and then boom, they're bouncing again. And not only that, we have a trend line break. In fact, we have a supply trend line that's broken. I'm gonna make the supply line red because the sellers are coming in, and then flat, they couldn't sell anymore, and then buyers stepped in, and we've got this big. You have you had 2 days to get in this trade before the big breakout north, and 120.87, right? So we'll see if this continues. There's a little stick sandwich right there at 21.75. We could probably move another 30, 40 pips on this before we actually move back down again. When maybe still, if more cases of coronavirus show up, if we get some other bad news that spooks the market. We do have the State of Union address coming out by President Trump today, and I'm sure he's probably going to take a victory lap over the impeachment, and that's going to be good for markets like Trump. And whether you are for him or against them, it's just is this what the markets? So just follow what the markets do. So we can see that euro yen. And the other yen pairs are also rallying as well. CAD yen probably not to the extent. Yeah, see, nice little V bottom. That's why you use JXY, because you're looking at a basket of currencies versus the Japanese yen, and they're all showing the same thing. I just typed a new one, looks exactly the same. A V bottom from a level of support down here at 72.30. Same thing. We got this support, and we have this break to the north side on the yen pairs. And the yen pairs might have some more juice to go. Probably back up to here, 74.40. We're at 73.35 on the Aussie yen. I still, like the yen for a bit now. Okay. We also had oil. We had U.S. oil had a rebound as well. So any of the, not much, but it's bottoming there. 50 penetrate. It got as low as about 49, and we got a little bit of a boost up today. Little boost up, little pullback. Higher low, if this low holds, we could probably see 51.47 to 52.76 in the upcoming days. Okay. So yeah, you always you want to look for support in an uptrend. You want to find that support. I mean, we're still trending. If you back it up a little bit, we are still making higher. We made a higher low here, higher than this previous low, and we're still, if things get bad, we could probably come back and test 30. But we're tremendously oversold here, so we could see a bounce, maybe up to maybe 55 or so. Okay, on the U.S. oil. But it's all about risk on, risk off. That's we could talk about that in the next video, where we talk about risk on versus risk off. We're always in type of this binary situation. Are we moving up with risk assets moving up like the stock market and oil and commodities, or are we dropping and running into bonds, running into yen, running into pound Aussie and euro Aussie, running into those weird currency pairs for safety? We're either doing one of those two things. So I'm going to talk to you in that next video about that. So if you like the video, give me a thumbs up if you like it. I really appreciate you guys bearing with me. Did have some technical problems. I'm glad that you came back online and started. I still haven't figured out where the comments are. I know there's somewhere. I know you're saying hi somewhere, and I'm saying hi to you. And I'd like to invite you to, if you want to learn more about what I do, you can check out my video here of this free master class called 4 Pillars for On-Demand Trading Profits and Financial Freedom in 8 weeks or less, even if you've never traded before. And a couple of things, people. People think, oh, this is a scam. You can't learn how to trade in 8 weeks or less. There are a famous group of traders called the Turtle Traders, and the Turtle Traders were the brainchild of Richard Dennis and this other guy named Eckhart, right? And they made a dollar bet that traders they can take common people off the street and convert them to professional traders, right? So they put an ad in the newspaper, and back in 1984, in fact, October of '84, they put this ad in the paper and asked and interviewed people, right? In fact, here's the actual ad. Okay, I saved it because no, I didn't save it. You can find stuff online. Richard Dennis, right, and William Eckhart. They're seeing the commodities, they're accepting futures, traders, and we're going to teach them the proprietary system. No experience necessary. Applicants should send a brief resume to this address, and there's no telephone calls to be accepted. So they actually put an ad for professional traders to teach them the proprietary system. Okay, now what happened after that? Those turtle traders were taught his system, and they became one of the most popular, the most profitable traders in history, right? And these are the names of those turtle traders that went through his 2-week course, not 8 weeks, but 2-week course, right? And this is September 5th, 1989, the Wall Street Journal, and you can see that they're compounding the return 124%, 114%, 107%, 94%, 80%, 88%, 82%, 70%. And some of these names, they are still trading, right? And you can see these annual, some like 296%, right? Compared to other indices, Barclays CTA index 25% back then. And no, I've done 200, 300, 400% myself, and I have students that have done 700, 800, 900% as well. So it can be done. It has been done before, which means like when you had the guy that did the 3-minute mile, 4-minute mile, or something like that, he broke the record. You know what I'm talking about, right? And then everyone started running this really fast pace once the barrier was been broken. So this barrier was broken a long time ago, guys. You guys just don't remember it, or you're too young, or you just weren't paying attention. And so winning traders can be made, not born, and this is evidence and proof. And the system which I've used, I've been using the same system for 24 years. I talk about it in detail in this masterclass. So when you see financial freedom in 8 weeks or less, some people get the system in 2 weeks. Some need 8 weeks. It all depends on the individual, but it is possible. It has been done before. It's not new. I just have put a new spin on it for this for right now. So you can claim your spot now. Once you claim your spot, just go ahead and enter your name and email address right there. And then I won't spam you. I won't sell your information. I don't like doing that to people. I don't like people doing it to me. So, you can feel safe to give me your real email address to contact you, because I'm not going to sell your information. Once you do that, you'll get access to a video and, pretty good, learn, the Forex cash machine. It's about an hour and 32 minutes. And then it'll give you some testimonies, show you some of the tools I use, and also show you these 4 pillars. And if you want to find out more, there's a button at the bottom where you can press, and you can talk to me or my team, and you can find out more about the Forex cash machine system. And we'll also tell you about the 3 components of a cash machine that you can put into your trading free of charge. And normally we charge $1,000 for this call. For coaching calls, no, I charge anywhere between $1,000 to $50,000 for mentorship and for coaching. However, this, because you guys are watching and you're online right now, it won't cost you anywhere near that price. In fact, the call is absolutely free to learn these proprietary components of my system. And then also, if you're a good fit and you want to find out how to get fast results, and if you're impatient and you need help to put this into effect faster, then you can ask, and then either myself or my associate Michael will go tell you more about the program and tell you the investment that's needed in time and also resources. So no charge for the call, and it's absolutely free to you. The cost of not making a whole bunch of money, you figure out how long, if I could teach you how to make this in a day, $30,000-$40,000 in a week or a month, how much is that worth to you? And if you miss it, then how much did you just miss out? Okay, did you miss out? And so you figure every month that you go without having a system, without having a mentor, how much does that cost you? That's the real cost. The cost, you'll always make more money than I'll ever charge you, because once you learn, you can never be taken away. Knowledge can never be taken away. So with that, I wish you happy pipping to you, and tune in for our next broadcast, and we'll talk to you soon. Cheers and happy pipping. Bye-bye. Thanks.
If you want to learn more about profiting from the Forex market, go to www.theforexcashmachine.com and sign up for a free training webinar. Get the secrets from Greg as he reveals how to earn limitless income. Learn more to earn more.